High inflation and rising interest rate environment has seen global agencies such as the IMF and World Bank downgrade global growth estimates, raising recession fears. However, India's large cap IT companies TCS, HCL Tech and Infosys broadly withstood these concerns in the July-September quarter. Among frontline companies, TCS and HCL Tech beat expectations supported by sustained demand for digital initiatives. The companies posted quarterly revenue growth of 3.8 to 4% in constant currency terms. Wipro, on the other hand, disappointed the street with a 9% year-on-year drop in profit and a less than expected revenue growth of 14.6%. Most companies reaffirmed that they did not witness any signs of demand slowdown, but they remain watchful of trends in key Western markets like Europe. Experts, however, say that the robust deal wins and the commentary on demand outlook hint that near-term growth is likely to stay intact.
The commentary for the business outlook looks quite comfortable in terms of deal pipeline. In terms of the current earnings underway, good that there is no major disappointment because the street was going in with an expectation that there is going to be downward earnings. So you've already seen about 25 to 30% correction in IT index and respectively for the other stocks. I think all these recession fears and budgetary cut are already priced in. If you are looking at long term, then maybe you should deploy 25% of your investable capital. Suppose if you want to invest 100 rupees, then maybe 25 rupees worth of investment should be done at current levels. And on dips, you should add the stocks.
Even though attrition in companies remained elevated at above 20% levels, a sequential margin improvement in the range of 16 to 90 basis points has provided some comfort. Analysts expect margins to continue to improve going ahead as they believe attrition will likely taper down from here.
We do expect in the medium term some tailwinds of normalization and attrition or even subcontracting and utilization and pricing acting as levers for margin in the near term. But attrition, although on an LTM basis, it looks flattish for the companies that have reported. The quarterly annualized attrition number is actually trending down. So on an LTM reported basis, it's going to start looking downtrending in the next 2 to 3 quarters. So going forward, we are building in margin expansion for most of the companies in Q3, Q4, and those would be another set of positives.
According to technical charts, shares of Infosys could remain range-bound in the next 3 to 6 months between levels of 1600 to 1200 rupees, while those of TCS and HCL Tech could see a good run on crossing levels of 3200 and 1000 rupees respectively. Wipro, on the other hand, could see a fresh sell-off on breaching support of 378 rupees. Today, markets will react to US retail inflation reading, while stock-specific action will likely be seen in Infosys and Bajaj Auto.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.